6,000, credit 6,000. Okay, this is the next thing related to the providing service. See the service. You don't have to do the sales because our focus in all on service businesses. So you focus on the service. So April 8, the business provide services to UPM, 2,000 on account. So what happened to the asset, liability, and equity? Asset, liability, and equity. When the business provide services to UPM, always remember in accounting when business provide services, then the business has to record the revenue. Okay, the service business has to record the revenue. So revenue increase means equity increase. Equity increase, the name of the account is the revenue. The amount is 2,000. On account. So on account means UPM does not pay the business yet. UPM owe money to the business. So in accounting, when a customer owe money to the business, then you record in account receivable. Okay, asset increase, the name of the asset is account receivable. Receivable UPM. The amount is 2,000. Okay, and then how to do the journal entry? Very easy. Asset increase debit, equity increase you credit. So the date is 8 of April. You debit account receivable UPM. The amount is 2,000. And then equity increase you credit. So in credit account revenue, the amount is 2,000. Okay. See the second transaction. Asset, liability plus equity. Provide services to UKM for 1,000 in cash. So what happened to your business? Okay, when you provide the service, you have provided the service, you have to record the revenue. So equity increase, the name of the account is revenue. The amount is 1,000 cash. At the same time, UKM pay cash. So cash goes into the business. This is your business. This is UKM. UKM pay cash. So cash goes in. 1,000. So asset cash increase. Increase in asset. The name of the asset is cash. The amount is 1,000. So how to do the journal entry? Very straightforward. The date is 9 of April. Asset increase you debit. Debit account cash 1,000. Credit account revenue 1,000. Okay. And 10 of April. What happened? Your business provide services to USM for 2,000 on account and 1,000 in cash. So what happened? This is your the asset, liability plus equity. So what happened? When you provide the service, you have to record the revenue. Increase in equity. The name of the equity is account is revenue. The amount is 2,000 plus 1,000, 3,000. 3,000 revenue. But the USM pay 1,000 only in cash. So USM pay cash. So asset cash increase only 1,000. And the balance 2000, the USM will pay in the future. So you record in account receivable. Increase in asset, but the name of the asset is account receivable. The name of the customer is USM. The amount is 2000. So you do the general journal, very simple. The date is 10th of April. The asset increase. So increase, first asset increase, you debit account cash 1000. Debit account receivable USM 2000. And then equity increase, you credit account revenue 3000. See, very simple. Credited account a bit in the right side. Okay, see here. Okay, here. A bit in the right side. Okay, we have done this. Now, okay, this is related to drawings. I have prepared the answer for you. Okay, see, we can do this quickly. So drawing at 11th of May, Mr. Razak, now you assume that you are Mr. Razak, owner of the business, took a few cleaning supplies costing $500 for his personal use. So it means that the owner of the business takes something from the business. So this is a drawing. So what is the effect of that on the accounting equation? So when the business owner takes something, asset supplies decrease because the owner takes supplies. Okay. So the owner takes supplies, so asset supplies decrease. The amount is 500. No effect on liability of the business, but the equity of in the business, the owner's equity has decreased because the owner takes something. When the owner puts something into the business, the equity increase. But when the owner takes something from the business, the equity will decrease. So the equity decrease. The account that you use to record this is the account drawing. The amount is 500. So how to do the journal entry? So this is 1, this is 2, journal entry. You just follow the rule of debit and credit. So equity decrease, you debit. Asset decrease, you credit. So the date is 11th of May. Equity decrease, you debit account drawing. Drawings 500. And asset decrease, you credit. So credit account supplies 500. Easy, no challenge at all. So and then the second transaction is May 11. Mr. Razak, the owner of the business, took 1000 cash for his personal use. So what happened? You know, when the owner takes something, it is a drawing. So you show the drawing. The account is drawing 1000. When the owner do a drawing, then the equity will decrease. Equity decrease, the account is drawing 1000, and the owner took cash from the business. The cash of the business has decreased. So decrease in asset cash 1000. So you do the journal entry. Drawing, equity decrease, debit. So the date is 12th of May. Debit account drawing 1000. Cash decrease, asset decrease, you credit account cash 1000. Okay, now you are done. And then here, there is another one. Okay, I will make it this. Okay. So here, May 13th of May, Mr. Razak, the owner of the business, took a few cleaning supplies, 500, and 1000 cash for his personal use. So this one is cash. Okay, cash. So what happened to the accounting equation? So when the owner do the drawing, you know equity decrease. Equity decrease, the account is drawing. The total drawing is 1,500. The owner took two things. Supplies 500, cash 1,000. So this the effect of this transaction on the accounting equation. So the journal entry is, the date is 13th of May, and then say drawing, equity decrease, you debit account drawings. Okay, debit account drawings, the amount is 1,500. And then see here, asset decrease, credit, asset decrease, also credit. So the first asset that has decreased is supplies. Supplies decrease, you credit supplies 500. And then cash also decrease, so credit account cash 1,000. Okay, you are done. Easy for you. Okay, and then number 6 now, receiving payments. Okay, let's see what happened. June 14, the business received cash from UPM 2,000 for the service provided on, this one is something wrong, on the 8th of April. Okay, you can check the question. On the 8th of April, the business has provided services to UPM. Now the business got cash or received cash from UPM 2,000. So what happened when the business received cash from UPM? When the business receives cash from UPM, the asset cash of the business will increase. The amount is 2,000. At the same time, asset account receivable has decreased to 1,000. There is no effect on liability. There is no effect on equity. So the journal entry is like this. Asset cash increase, so asset increase, you debit account cash. Oh, you have to write the date first. 14th of June, debit cash 2,000, and then credit account receivable UPM. The amount is 2,000. Okay. Okay, this is the next thing for receiving payment. On June 15, the business received 12,000 from NAEILA Express for rental fees. Okay, so how to record that? So remember, if you have a business, then you receive rental fees from somebody, that is a revenue. So there is a revenue. So revenue, when revenue increase, the equity increase. So there is an increase in equity. The name of the account is account revenue. The amount is 12,000. At the same time, the business receive cash. So there is an increase in asset cash 12,000. So you do the journal entry. The journal entry is asset cash increase. Asset increase, the date is 15th of June. Asset increase, cash 12,000. And then equity increase. You check the rule of debit and credit. When there is an increase in equity, you credit the account. So revenue in 12,000. Okay. Okay, done. Okay, the last thing. Okay, making payment. Making payment means the business pays somebody. So when the business pays somebody, the cash goes out. Okay, see here. The business pays salaries 1,000. So what happened to the asset, liability, and equity? First, the asset cash decreased because the business pays somebody. cash out. So asset cash decrease 1,000, and an expense is related to equity. So when there is an expense, the equity decrease. The name of the expense is salary expense. The amount is 1,000. So the journal entry is like this. You have to write the date, 16th of July. You can do either way. If you want, you do this first, you can also. Credit cash, asset decrease credit, so you write the cash. Credit cash 1,000. And then equity decrease, you know it is a debit, so debit account, salary expense 1,000. But you have to show the debit account first, the debited account first. You cannot show the credited account first. No, always show the debited account first and then the credited account. So this is the answer. Now the next thing is this one. Pay Fibris Berhad for the purchase made on May 6, 5,000. So what happened when your business pays somebody? Asset cash decrease because there is an cash out, and then Fibris is a supplier that the business owe before. So when the business pay, the liability of account payable for Fibris decrease by 5,000. So how to do the journal entry? The journal entry is like this. Easy. Asset decrease, you credit. Liability decrease, you debit. So the date is 17th of July. You debit the account payable. So debit account payable. Account payable. The name of the Fibris Berhad. The amount is 5,000. And then asset decrease, you credit. Credit account cash 5,000. And then you have the last transaction. Last transaction is this. Okay, on July 18, the business paid 5,000 to Juju Jaya Berhad for the settlement of credit purchase on February the 2nd. Okay, what happened? When the business pay, there is a cash goes out. So asset cash decrease 5,000. And the liability has decreased. When the business purchase something from the Juju Jaya, you record in account payable. At that time, you record an increase in liability because the business owe money to Juju Jaya. Now, the business pay back the amount that has been owed. So, the liability decrease. Asset account payable decrease. So how to do the journal entry? Very straightforward here. You show the date. The date is 18th of July. Liability decrease, you debit. Debit account payable for Juju Jaya. Jujaya Sdn Berhad. The amount is 5,000. And asset decrease, you credit account cash 5,000. Okay, you have done all the questions. Thank you very much. You can communicate with me in the comment section.